seems like when it comes to moving markets, Jerome Powell has all the power these days. But with both the S&P and the Dow on track for the best June gains in decades, could Powell choose to slam the brakes on the July rate cut? And what would that do to the hopeful market? Let's bring in Michelle Girard, Chief U.S. Economist and Managing Director at NatWest Markets. Michelle, thanks for joining us. Let's just start with when you think the Fed will move to cut rates and by how much.
Well, I think everyone thinks the Fed is going to cut rates in July. Certainly the market is more than priced for a 25 basis point cut. Quite honestly, the discussion is not if they'll cut, but by how much will they cut? Will they move by just 25 basis points, which is our expectation, or could they make a larger move and actually cut by a half of a percentage point? There was one of the speakers, one of the FOMC voters yesterday, Governor Paul, not governor, but Bank President Paul, who, Bullard, who is among the most dovish, who seemed to downplay his own feeling about making the larger 50 basis point rate cut, and the markets actually were disappointed by that. So you can see this market is certainly anticipating a rate cut next month, and again, I think that it'll be validated. It's just a matter of by how much.
Michelle, I read an interesting note today from UBS, and they're positing that if a cut does not happen in July, that it actually might not happen at all. The idea being that in the second half, business sentiment could improve, capital investment could improve. Do you subscribe to that this is sort of like the sweet spot to make a move, and if they don't, it's kind of not going to happen?
Well, that's a really interesting point, because to some extent it does feel like the point of maximum risk, if you will, is right now. Uncertainty is at its height with respect to the outcome of the trade negotiations ahead of the G20 meeting. There's a lot of concerns about global growth. If we get good news on trade, and if some of the uncertainty wanes, the economy arguably could do better in the second half of the year. But that's a big if. And I think also some of the expectations that people have for the economy to do better in the second part of the year is based on the action that the Federal Reserve will be taking to provide more accommodation, to give the economy some insurance. And if we don't have that, if the Fed were not to cut now, and we saw financial conditions tighten, if the markets sold off in disappointment, then I think your outlook for the second half of the year would be called into question. And so in that case, I'm not sure that if they didn't act now, they wouldn't ultimately have to take action later in the year.
Right. So that brings up the question, Michelle. So in other words, if we don't get a rate cut and there's no progress on trade, I mean, that's already priced in, right? Or
right,
is it?
right.
I mean, that's sort of the big question right now. And so if that's the case, then there's only downside from here. I mean, what is the calculus?
Like that. I think it feels like that. And quite honestly, for the Federal Reserve themselves, the risk reward of taking action here, I mean, if you cut rates and the economy ends up being okay and it looks like maybe the rate cut wasn't necessary, the cost of that mistake seems relatively low, particularly when you've got inflation well below your mandated level. I mean, if inflation were to rise as a result of this unnecessary rate cut, I mean, I feel like the Fed would cheer for that outcome at this point. Meanwhile, I guess if you don't cut rates and you sort of feed into the concerns and the uncertainty that people have about the outlook that is leading, to a more cautious behavior, and the economy actually continues to lose momentum, now you're behind the curve. You don't have a lot of ammunition because rates are relatively low already. I just don't think that's a position the Fed wants to put themselves in. So from a risk kind of reward standpoint, I think too it favors this Federal Reserve acting sooner rather than later.
And then Michelle, just quickly on the G20 later this week, I think it's really hard at this point to get a good read on what might happen. Exactly what the president wants certainly does not seem exactly clear at this point. But just in terms of trying to get where you're looking at the economy, do you expect to be making any changes Is there any outcome, I guess I should say, that would make you change your base case from this upcoming weekend?
No, I mean, I think that's a really good point. In a way, even if they were to come out with an agreement, we've seen with the president, we had an agreement with Mexico and Canada, and yet the president was willing, at the time we were trying to pass that in Congress, to threaten tariffs on Mexico. Even if there is an agreement, the threat that tariffs could come back into play as an enforcement mechanism, I think is going to keep everyone a little bit cautious. No question an agreement would lead to a relief trade, but as we settle back in, I'm not sure that I would be changing any of my forecasts, because I do think uncertainty will sort of continue to linger.
All right, Michelle Girard, Chief U.S. Economist for NatWest Markets. Thanks so much for joining us.
Thanks for having me.